All right, and welcome back for the episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So, finally, markets able to get through that gap. We talked about that. Really, I've had that penciled in since December as a potential level here. And then, of course, I've been talking about the 425 area as well on the SPY. And we did get through that. And we're at 427.92 on the close. And so, overshot by, a couple points here. That's totally normal. It's been a long time coming here. So we've been grinding, and finally getting up into that area. I thought there was a chance we could have a correction before then. But right now, market's holding up. Again, the jobs data Friday. Okay, so the Fed has indicated that they're going to pause, they're going to pause at the next meeting, and they're not going to hike rates. So we had a good jobs number, and essentially the way the market looks at that in the short term is that's a positive, right? So if the jobs number is good, it indicates a soft landing, and if the Fed's not going to look at rate hikes right now, then again, that's a positive for the market. To me, that signals stagflation. The market doesn't really care about that right now, and the market's kind of just in a sugar high. So it's gonna look at the positives of it. I still think it's a ridiculous notion that we're gonna have a soft landing. But that's neither here nor there right now. The market's looking at that positively. And the debt ceiling, right? So Senate passing the debt ceiling bill on Friday. And then it was obviously signed into law on Saturday. Right now, again, to me, it's just a little interesting, right? So it's the story, quote unquote, is that, the market's seeing the debt ceiling deal as relief. But to me, it's like, well, we didn't sell off into it. So it would make more sense if we were selling off, right? If we came down here, maybe into the 400 handle, and then the debt ceiling got done, then I could see a pop off of that, right? But it's like, well, where's the relief, right? There's no selling pressure, so I don't see relief. So to me, just a little strange here. But they always need a story to keep the market, to keep the news happy. But right now, again, it does look like, and I know the market's held up really well, and we've got to respect it. I mean, especially the NASDAQ, right? Again, another up week for the NASDAQ. I believe that's 6 in a row now. So 1, 2, 3, 4, 5, 6. We'll see if it can work on 7 here. Very extended and overbought, leaving a little bit of a hanging man there. But again, it's not like we were selling off ahead of this debt ceiling. We saw bloodbath like 2011, where the market was panicking. So it's kind of the opposite. Now we look to, and I showed you this chart last week. But again, the last time that we had a really rapid refill of the TGA was in December 2021, and we know what happened to equities after that. Now, I know some people out there saying, oh, well, reverse repo is going to soak it all up. It's not going to soak all of it up. It can't soak all of it up that quickly. But bottom line is that liquidity is going to come out. Does that mean we're going to crash tomorrow? That does not mean that we're going to crash tomorrow. It means that it's going to be harder for the market to shake off bad news. And, you get a catalyst, you can get some corrective moves, right? And with liquidity coming out of the system, again, we saw what happened in March. They definitely dumped a ton of backdoor liquidity in. We were set to roll over, right? So, they came in and they saved the regional banks. It's been awfully quiet, hasn't it? Ever since that, they started dumping liquidity into the market behind everybody's backs. But right now, the Fed is still doing, or at least they're back to doing QT, and you're going to have the Treasury drain. So I should say the inverse drain now, which can pull liquidity out of the market. And you see the bond market, the 2-year here, we've been talking about that. If we look at the yields, that's been creeping up a little bit. I think there's some anticipation. Now, again, there's talk of, okay, well, the TGA drain, that's priced in. I'm not so sure, right? So if it's priced in, why are we surging, right? If we were selling off very sharply ahead of like I said previously, ahead of the debt ceiling deal, then I would say, well, we might want to look to go long here, right? Because they get that done. Yeah, now you could say, yes, the TGA drains probably, they're probably pricing that into to a degree, but we're doing the opposite, right? We're surging, tech stocks, everybody's talking about NVIDIA, of course, AMD, they've had these just incredible runs here. AMD, I think, up 82% here. For the year. At least at one point it did pull back a little bit off the highs. We see NVIDIA here, insane valuation. I think it's above 30x sales right now. And this is ahead of what's probably going to be a recession. The Fed calls it a mild recession. They said there wouldn't be inflation. Then they said it would be transitory, and then we all know what happened there. So that tells you how I feel about there being a mild recession. But in any case, that's the way the market is right now. So I'm thinking that once this starts to set in here, the market is. I mean, we've had an incredible run. The Nasdaq's up 13%. Since this little pivot here in the beginning of May, essentially. So again, looking like a sell the news here. We did hit the 618. We talked about that last week, but the Nasdaq held up well this week. Again, if the market's going to be up, generally, all of them are going to be up, all the indices, and we did hit the 618. Still going into a lot of resistance. There is a gap at 360. It's not that far away. You get maybe kind of a euphoric move early in the week. I could see that getting hit. Another reason I think that could get hit is if you look at the spiders here, we start getting into the technicals now. We hit the 618 on the NASDAQ, and on the SPY, we're really close, right? So if we get that level tagged, you can see right there, right around the 430 handle, and doesn't that coincide perfectly with that double top? Nice sell bar, right? A couple of sell bars there, and you can see them on the weekly as well. Pretty good supply right in that zone, pivot high. Right, so good area there, 618. We'll see if that gets tagged again. Generally, when you get kind of close to these levels, they tend to want to hit. So I think it's early. Maybe you get some type of a, kind of hangover. Maybe kind of a sugar high move. Maybe early in the week, that level gets hit. I think it's likely that we do see some type of corrective move. If not a flat-out sell the news. But we've had a huge squeeze here. Call volumes are out of control. A lot of zero DTE call buying, obviously, driving the market higher, driving these big tech stocks. And it's usually been the theme on Thursday, Friday. That wasn't really any different this week. I will say, here's your positive for bulls here right now. Breadth on Friday did improve a little bit. If we go back to the Qs here, we can look at the AD. So that did uptick. Now, again, this is just one day. That doesn't mean, that doesn't make it a trend here. So it's something to watch here, but I think either way, even if you are going to have some type of a summer, float up, summer doldrums, it's got to be after a correction first. The Russell 2000 did get a bid on Friday on good volume too. And we got above this trend line. Now, that's not the be all end all. That doesn't mean it's breaking out just yet. You still have a big fat weekly inside bar pattern here, inside of a monthly bear pattern. So even if you get up to 190, there's a ton of resistance up there. And again, monthly, it's a very, very weak pattern here. So again, breadth did improve, but I still think that either way, you need to have some type of corrective move if you're going to have a continued float up. If we continue to have this sort of uncontested rally, you risk kind of putting in a blow off top, and then I don't think you get a summer float up. I think the move, tops out much sooner. But again, that's kind of what we're looking for here. So on the Russell, again, we'll see what it does early in the week. You got a nice bid off that level. You filled the gap. There's some resistance at 185 here in the short term, or it may even pull back in on Monday. We'll see what happens. But watch that 618 there on the spiders. So right around that 430 handle, maybe even a slight pierce of that. The Qs were basically into that level already. The Dow did get a nice bid on Friday as well, up 2%. So doing a little bit of catch up. We'll watch the 340 handle and then 343, which it never quite got to a few weeks ago. But those are the levels that I am watching here on those indices. Semiconductors here finished fractionally lower. So again, we kind of talked about that. Small caps getting more of a bid. And again, I'm using air quotes here. The story is that you've got, banks. There's relief in banks, right, because of the debt ceiling deal getting done, like anybody thought it wasn't going to get done. So I find it comical. So that the banks are up on relief that the debt ceiling deal got done, as if it was, not supposed to be. But that's what happened. Semiconductors pulling back, though. So you saw that rotation a little bit here, way overbought, way extended, and into a lot of resistance, right? So there's your 150 red bar high. We hit that. We pulled back and had actually a red week. So we'll see if this starts to continue to come down. We'll look at 130 to 133. And I do think that is a likely possibility. We'd have a big fat gap there on the SMH as well. So, not a healthy move any way you look at it, and valuations getting pretty out of control right now. IGV here, that did hold up well. It did have a hanging man too, so a little bit of possible distribution going on here, and you are going into a big sell zone. It did close above the 100 week moving average. So that is a positive here. So we'll give that, the benefit of that. We'll respect it here. But again, just watch. We're going into a sell zone, and, we're overbought and extended. Again, the market's been holding up as long as, as long as we have that liquidity. Market can kind of defy gravity here and kind of hold these levels here, but obviously that is set to change here in the near term, so just be careful. Dow Transport's had a nice move, so we've been watching this wedge. You finally got to move above that, and it was on a weekly close. The only issue I have is that this should have been breaking out with the market really since February, and it's been making lower highs. So I don't like to see the transports. And then the same thing with the Russell too, right? The Russell had a nice move Friday, but this should be leading in a bull market, and it's not. You don't want to see it playing catch up here. You don't want the transports playing. You don't want to see the transports playing catch up. But they did get a pop Friday, so again, we'll respect it here. And if that continues, you can continue bid from the transports and the Russell, and you get some rotation after a correction to take place. Then I think the market can have potentially a summer float up. But right now, in the near term, again, just very, very extended here. And going into, essentially an event where liquidity is going to get drained. But transports here, they got above that area. Near term, if they can go higher, we'll say 14.4 to 14.5. That's really the what I'm looking at right now. If this gets rejected, though, and you break back below this wedge, this is in big trouble. But for right now, they held up, so we'll respect them here moving forward. All right, let's get over here let's look at yields. So let's look at our 2-year first. So that finished the week at 4.5. And again, we had a nice move up here, little pullback, and we held this level and got a pop Friday. If this continues higher, here's the elephant in the room right now that the market doesn't care about right now. But if this continues higher, if you crack 5%, I think you start to see panic in the market at some point. Why? Because the Fed funds rate is essentially at that area, and they're not going to hike, right? So the Fed funds rate is going to stay around 5%. If this exceeds that, I'm sorry, but they're not going to be able to stop hiking. So that's really the risk right now. The market doesn't care. The market just cares about, short term, it's a soft landing, but it won't be one if this continues higher. There's the 5-year, again, pullback pattern, nice pop, 10-year pullback pattern, nice pop on Friday. So yields here are signaling some issues. And again, I kind of feel like a broken record here, but you look at the performance of, again, just TLT, or we just bring this up here, look at the Qs, and you compare it to, we'll just use TLT. This is telling you that risk premiums are pretty high. So big divergence here, big alligator jaws, they got to come shut. Everybody knows the bond market leads and the stock market follows. Stock market's way out of line right now. Bonds, they're calling BS on the rally. So that's my take on it right there. But bond market, or I should say the yield market, looks very strong right now. So definitely respect that. Housing, XHB had a nice move here on Friday. We'll see what that does going into next week. But, nice power move. I thought you would at least get to 68. Never quite got there. But big bid. We'll see how that does perform going into next week. You are coming into this little triple top here, but nice reversal there. ITB, same thing, slight lower high though, but you did get back above those moving averages, so that is in decent shape. And then VNQ here up to 0.5%. It did get above this red bar, so that's a nice sign of strength here. Still a weak chart overall, and there's still a lot of resistance around 84 and change on the VNQ, but yeah, nice pop there on Friday like everything else. XLF up to 0.18% Friday and got above the moving averages here. Still on the weekly though, it's just not a good chart really any way you look at it. Down move, sideways to up chop. A lot of resistance at 34 if it gets there, but got a little bit of a bid on Friday. KRE, we talked about this last week. I said there's a good chance this can get a bid. Little ABC up, right? So good, he had a good green bar here, and then neutral to sideways action. Usually tells you it wants to go a little bit higher. We'll look at 44 to 45 on this. That's good resistance there, but KRE definitely getting a counter trend bounce here, and again, seeing a little bit, potentially money flow, potentially rotation out of tech, and that's what the market's going to need here. I still think that regardless of that, you still need to have a correction, but nice move there for KRE. KBE up 5% as well, so that held up. Broker dealers, we talked about this as well. Said if this consolidates, it can go higher. We'll look at 460. That's a breakdown bar there. and just above the 200 moving average. So broker dealers getting that kind of ABC bid as well. Over to energy markets here. So let's get to crude first, as always. Crude having a nice little gap up here, 3%. Doing this video Sunday night. There's more talk of OPEC cuts that came out on Friday as well. It got a bid here, so nice pop there for crude. And we had this kind of little wedge here. It broke down, it tried to break down, and then it got a bid up. So let's put our other levels back on. And again, I said that if it holds 68, or it's got to hold 68, it tested that on Tuesday, and then Wednesday. And then Thursday, Friday, you got a bid, and then slight higher highs. So again, we've been talking about 76 for a while. Just open, market futures just opened here and got to 75. Looks like we had a little bit of a sell there. Yeah, right on the open. So we'll see if that can get to 76. Shouldn't really have trouble. It's not that far away. That's my ultimate target here for the near term. We'll see what it does. I still don't like this pattern right now. As far as direction, I don't really have a good direction here in the near term, but it does look like OPEC threatening more cuts here. So obviously that was a tailwind there. In the near term, lots of shorts in the crude market too. So I'm seeing a little bit of a pop off of that. XLE, I still think this has to go lower here, but it got a nice bid on Friday. With everything else, they've been trying like hell to save this trend line here. I'm just not a fan of the weekly. I'd like to see a little bit more of a correction in these oil names, but I think they will be a good buy in the second half of the year. Same thing with XOP that got a bid on Friday, as did OIH. OIH actually held up well though, had a 5% move on Friday, and I think about 4 or 5% on Thursday. Closing above the 50 MA. This can get to 280 here in the near term. So oil services I like better out of the three between XOP and XLE. But nice pop there. We'll see what that does going this week. Just you don't want to see it lose 250 though. If you get it, especially on a weekly close. But I got a nice bid there on Friday, so we'll give that the upside bias for now. Natural gas pulled back this week, but held that. So I'm watching this channel right now, and we've had higher lows since April. And, it looks like it's put in a bottom here, and we back tested this area. We can actually kind of extend that out, and it's getting a little bit of bid here as the futures open up. We'll see what that does going into next week. But I think you get one more higher low here, which it's poised to put in. This has a chance to start to really get some momentum here and shift the kind of, the trend. But nat gas pulling back, it held that trend line. We'll watch that, obviously, next week. Dollar index here, again. A headwind that the market doesn't care about right now. Again, kind of much like yields, dollar rising. We did have a little pullback Thursday and right back up Friday. And, again, this is an up tape. The market was up big Friday and the dollar was up. Again, the market can ignore these things for some time. Eventually they will be realities, though. But you held the 20 moving average here. Dollar looks okay. If you get up to 106 and break that, I think that's kind of your level here. And that may coincide with kind of that 5% area on the 2-year. So we'll watch that for the dollar. If you get above that, I think then the market kind of starts to look at it and say, okay, the dollar's bottomed. Maybe there's some things going on moving forward, maybe some risk that we have to actually pay attention to. But right now, dollar holding up. And yeah, we'll just leave it at that for now. Gold hanging in there okay. It did hold, it didn't have a pretty good sell on Friday, but you held the 20-week moving average. So right now, there's no problems. I don't see any issues. It's not broken. You lose the 20-week moving average, and you probably go down to 1,900, maybe 1,875 there in the near term. That's really the best I've got on gold right now. I don't love the pattern here. A little bit more neutral here, but if the dollar holds up, then that may put some pressure there on gold in the near term. GDX. Some of these gold stocks are getting attractive. I talked about to my members Newmont at $40 for a while, and it got down to that area. I would have liked 39 a little bit better, but it got a nice bid Thursday here. But some of these names looking kind of interesting. GDX pulling back and got a bid on Wednesday, Thursday, and coming back in Friday. SILJ with a nice pop there, getting above that red bar. So, in a little bit better shape here are some of these miners. Silver here going up into the 20 MA on Friday. I still think it needs to test 22, but it's holding up for now, so we'll leave it at that. I don't really have a bias here on the metals in the near term. Maybe just a little bit more pressure, like neutral to bearish here in the near term, but we'll see. I have to see more of a pattern here start to shape out. I'd really like to see silver around 22 here. Anyways, platinum. up 75 basis points right now, right off the gate here. That did lose this 1040 level, and then we came all the way down to 1,000, and probably wants to get to 975, 980 here. I like the bigger time frame on this. I just don't have an entry right now, and the same thing with palladium. I like the bigger time frame. I would like to see a pierce of double bottom potentially for an entry, but I like palladium on the monthly as we are into that big 618 as I've shown you before. And then copper here, nice bid on Friday, right into the 380 area. I still think this wants to go test 340, but I got a nice bid there. Before we get, let's go to the potash names here. MOS, I still like this level here on the bigger time frame, and again I'll show you here. 100 month moving average, you pierce the 618. Lots of support right in this area, so we'll see if that can get a bid. NTR, really kind of the same thing right here, previous all-time high, and then another high, and that got a bid here later in the week. So I do think these potash names are pretty intriguing. DBC also getting a bid, still below. I'd really like to see it get back above 2350. If it can't, may need to go down and test 20, but 22, there's pretty good support here. So we'll see how it does into next week. I still think they're into an interesting level, though. We'll continue to monitor that. Lastly, uranium on fire here. CCJ, huge move Wednesday, Thursday, a little pullback on Friday, but take a look at what we did. Looks like a clean break to me on the weekly with volume. So CCJ, this is getting interesting. We talked about this. I said this for a while. Look, it's got to do a lot of backing and filling. Look what you're going into here on the monthly. This is a lot of supply. Look at the volume there, right? There's a lot of supply there. So what you're doing is you're just consolidating here, and you're building energy to go attack that. This may be getting ready. So CCJ in really good shape here. URNM, we've been watching this for weeks. And I said, look, as long as you stay below these trend lines, you got bearish consolidation. That's starting to reverse. Now you still got to get above, to really, really, really negate it. You get above 34.22 on a weekly close. This is going to surge. But I'm interested in watching these for pattern here. Little uptick in volume there. That's acting well. You can see URA also, SRUUF obviously getting a bid. So uranium starting to uptick here, and really start to do some technical damage to some of these bear patterns. So I'm interested here in uranium. CCJ, big move. If you get some consolidation, this is probably set to really take off to the upside. So uranium making some moves here. We'll see how that does in the second half of the year. All right, lastly, over to Bitcoin. We'll get back over here. So again, not really a whole lot going on. So again, we tested this head and shoulder kind of neckline earlier last week, and we never closed below this green bar here. So 26,836, that's your support area. You get a close below that. I think that we start to head lower. Again, I'm going to say the same thing I've always been saying here, but the weekly is still fine, right? So as long as you stay above this 20-week moving average, it's actually still got a chance to make a new nominal high. I'll give it that right now. It's just the longer that we don't, the longer we stay below this, the less of a chance of a rally. But again, it's holding up on the weekly, so we'll respect it. But nothing really doing this week, just a lot of chop here. And it's interesting to me how Bitcoin's not participating in this rally. We've even seen kind of some of the really, like Carvana, I think like Coinbase, like some of these, like, even the Bitcoin names, Riot, some of these have had nice moves, Marathon, Palantir, that's an AI name here, but some of these kind of beaten down, Kathy Wood stocks, right? The ARCs of the world, those have gotten a bit, and Bitcoin really hasn't. So is it telling us that, this risk-on move is really not risk-on? It's possible here, but Bitcoin goes through these periods where it just kind of does what it wants to. I will say it is telling, though, that, previously we have seen Bitcoin top out before stocks. So that could be something to keep an eye on here, but just interesting to see it not really participate in that rally. But again, that weekly pattern is still fine, so we'll continue to watch it, obviously, moving forward. Anyways, spiders here. Again, watch that 618. We get a reaction off that. I think we probably have to go into correction mode again. NASDAQ up over 13% here in the last month. Just unsustainable gains. It's really that simple. And again, going into a TGA drain. I have to think that conditions are ripe for a pullback. If we were down heavily into the debt ceiling, then I'd say it's probably like a buy the news, right? Sell the rumor, buy the news type move. I think it's going to be kind of the opposite here: buy the rumor, sell the news, and liquidity will be draining out. By the way, buybacks also falling off a cliff in the second half. So that's something that nobody's really talking about. By the way, Nvidia, perfect example here. They're doing a dilution after doing buybacks. I mean, it's almost borderline. That's not really borderline illegal, but it's questionably morally. But in any case, that's the setup here. Watch that 618 here on the spiders, 430, and then the double top there going to next week. Those are the big levels. Anyways, guys, gonna wrap it up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. I'll talk to you all next week.